When spodumene is $2,000 a ton, people don't think about transport costs a lot. I can tell you, having been in the trenches, people care a lot about transport costs when spodumene is $600 or $700 or $800 a ton.
We do have term sheets that are hitting our desks now in terms of providing full debt coverage for the project.
Welcome back to Rockstock Channel. It is Thursday, February 19th, and we are back for another Rockstock recap episode. Joining us today again is our bestie, Keith Phillips, former CEO of Piedmont and Lithium, and who was recently promoted to executive chairman of Q2 Metals. Before we get started, I'd like to flag a note I published last week entitled, "Which Critical Minerals Matter Most?" which provides a framework for prioritizing among the 60 minerals designated as critical by the USGS and thinking about the most relevant tools to address these minerals. Investing News Network interviewed me about this note, which includes my analysis of Project Vault, Forge, Pax Silica, and other pronouncements coming out of Washington this month, as well as my call for a strategic lithium reserve. The first hearings in the House for the Secure Minerals Act will take place next week on February 24th. This was covered in our recent interview with Arnab Datta and Alex Turnbull. Matt also distributed a collection of his blogs, including his most recent deep dive into electric vehicle demand called "What Do 2025 Trends Tell Us About 2026?" A quick reminder, if you'd like to receive these blogs as well as the lithium-ion bowl directly in your email box, visit rkequity.com or blog.rkequity.com and register your email. And if you find this content valuable, please remember to like, subscribe, and share Rockstock Channel videos. Our main topics today will be lithium and a bit of rare earths, and following our recap discussion will be an update interview with Lithium Ionic, a Brazilian spodumene developer, so please be sure to stay tuned for that. And note, as always, that we may discuss individual stocks in this video, but we are not financial advisors and nothing in this video should be considered investment advice. Please do your own research and read the disclaimer at the end of this video. And finally, I'd like to thank our sponsors, USCF Investments, who have been making it easier to access commodities investment strategies for almost 20 years. USCF Sustainable Battery Metals Strategy Fund, ZSB, is designed to capture exposure to metals powering electrification, including lithium, cobalt, copper, nickel, aluminum, and silver. To learn more, watch our inaugural episode with CEO John Love and visit uscfinvestments.com. And Lithium Royalty Corp., which in December agreed to be acquired by Altius Minerals, a diversified royalty company based in St. John's, Canada. Altius seeks to create value through a diversified royalty portfolio. Lithium Royalty also holds a 1.5% gross revenue royalty on the Goulamina project in Africa, owned and operated by Ganfeng Lithium. And with that, welcome back, Keith. Why don't we start by discussing your recent promotion from, non-executive director to executive chairman of Q2 Metals.
Howard, thanks for having me. Matt, great to be with you again. Howard, I joined the board of Q2 in October or November. As you may know, Q2 had a vacant seat for a chair. I was asked if I'd be interested in filling that role, and so I was appointed executive chair a couple weeks ago. And I couldn't be happier. I think it's an exceptional story. It's an unusual story. I retired in August from my position at Piedmont with the merger with Sayona to create Alevra. Minor correction, I was never CEO of Alevra Lithium.
Sorry.
But I was CEO of Piedmont. And as you know, sort of been looking for things to do. And I really I'm in a fortunate position where I don't need to do anything, so I only want to be associated with situations that I think are particularly special. Q2 is clearly, with the Cisco deposit in the James Bay region of Quebec, has something very special. It's a very large situation, and mineral resource will be coming in the next several weeks. And based on the exploration target and all subsequent drilling, we're very enthusiastic and encouraged about what it might look like. So really happy to be active there. And it's easy for me. It's spodumene in Quebec. I have great familiarity with that. It's a company that could appeal to investors, not only in Canada, but also in the United States and Australia and other parts of the world. So I'm familiar with that. And it's an asset with strategic interest, as you might imagine, just given the scale and quality of the ore body. So I've got some experience with things like that as well. So it's exciting, and I'm pleased to be involved.
Sounds great. And there's been a lot of, at the start of the year, a lot of conferences in Davos and Riyadh, but now we're getting back into the regular kind of mining season. I think BMO is next week, PDAC the week after that. Matt and I will be at PDAC and are looking forward to catching up with Alicia and the team there. But I think you're going to BMO with a Q2 hat. Is that right?
Yeah, listen, I was invited to BMO as a friend of BMO. They've been an advisor. They were an advisor to us at Piedmont on a few different matters. I've known them, had great respect for that bank and firm for a very long time. The conference they run in late February every year in Hollywood, Florida, I think is probably the best mining investor conference. Really high quality turnout of companies and institutions and some strategic parties, government parties as well, private equity groups. So it's pretty interesting. I was invited as a friend of BMO several weeks ago. And then with my appointment as executive chair at Q2, they offered to kind of pivot my invitation to that role. So that's great. I'm very happy to be there representing Q2. I'm in the one-on-one calendar now, which is good. I've got a series of meetings, and I'm looking forward to it, and looking forward to handing business cards out actively around the conference. So it'll be a good event. That starts this coming Sunday. It hopefully starts at 8 a.m. with the gold medal hockey game, which we're hoping is going to be the U.S. versus Canada, which will be a lot of fun, but we hope they both make it. They both had scares yesterday. But my meetings start at 2 o'clock Sunday, and it's a pretty busy schedule through kind of 2 o'clock on Wednesday.
That's great. I haven't even been paying attention to the Olympics to have known that. So now I need to step up my game. I know Matt recently was, watching West Ham or something for soccer during another call with, one of our friends. You've also recently joined a private company, Rare Earths Americas, on the board. Is there anything you can say about that?
So I joined that board at a similar time, October, November last year. That's a business that was a series of rare earth assets in Georgia in the United States and in Brazil. I've been an early shareholder in that company through friendships with some of the kind of founders / cornerstone shareholders. It's pretty interesting. It's an American company, domiciled in Texas, headquartered in Denver, pre-production, but exciting exploration opportunities in Georgia and some early resource assets in Brazil. And it really plays into this whole America's critical minerals theme at a good time. So I think that's an exciting situation.
Sounds good. I'm a shareholder of that as well. It's a similar team that we were familiar with Tazo Arima and the former founder of Piedmont and also the founder of Hyperion X and Brazil Rare Earths and the like. So, okay, Matt, what say you? That we have a bit of a docket here. There has been there was news overnight that Pilbara is restarting the Nugaju, the former Altura asset. Why don't you guys start and comment on that?
Yeah, I mean, obviously, interesting to see these restarts going through, and it does talk to the view that there is potentially a small overhang of capacity that can come on in the quite short term this year, now that prices have gone high. In the Mineral Resources report, they suggested that there's a feasibility study into Mount Marion underground, and there is a potential for most of the Western Australian producers to up their production in the near term. So I think that there is a risk that sort of lithium production is going to increase into this price move, and potentially, obviously, Sigma was out of production in the fourth quarter. They've now restarted production, and we'll be giving production guidance in the next couple of weeks. So we'll get some sort of visibility over the next sort of 2 to 3 months or so as to what's going to be in production in the rest of this year. I think the key area for me really that we don't have very much visibility on is in Africa, particularly in Southern Africa. And there've been lots of rumors going around about the quality and the potential of those Zimbabwean projects to ramp up production, or maybe not to be able to ramp up production. So we'll have to wait and see what happens there.
Okay. Keith, any thoughts on the Pilbara's restart of Altura?
Yeah, it was inevitable.
What used to be Altura.
Yeah, no, it was inevitable. And, when I left Piedmont, it's, I guess, almost 6 months exactly now. In 10 days, it'll be 6 months. Wow. But for the several months and quarters prior to leaving, in speaking to investors, it's just very clear there's a lot of this latent capacity that can come on. And that's just a reality. And we'll get through that. And but the growth in lithium demand continues to be strong. And I think this will all be digested. There isn't a lot of greenfield development in spodumene at the current time. So but the brownfield expansions are there. Pilbara also talked about their Brazilian project. They also talked about their P2000 concept, and there are others as well. And I think it'll be really interesting to see how the North American projects fit into that. And there have been some good discoveries in Quebec in particular, also in Ontario, North Carolina, et cetera. But it'll be really interesting to see how those come in over time. I think what I find interesting about, say, Q2 and the job that Alicia and Neil and others have done is it's clearly a massive high-grade deposit in a really good location that is currently undeveloped for lithium production, and that where we desperately need more lithium production in the West. When I say the West, I mean North America. And part of that is getting these mines online. Part of that is downstream conversion. I know we'll talk about that later on, but I'm relaxed about what PLS is up to. It makes sense to do what they're doing. They've been measured about it, waiting for the market to solidify. And I don't think 200,000 extra tons is going to have a big impact on the market. But there are a lot of projects that will come online over the next several years. And I think, Matt, I don't know what your numbers are, but if the market's 3 million tons of LCE by 2030, I don't know how many million tons we need every year to meet demand, or how many hundreds of thousands of LCE tons we need, but it's a lot of spodumene to the extent spodumene fills the gap. So there are big opportunities there, I think.
Yeah, I mean, I've certainly got a deficit, in the last couple of years of this decade, and it grows increasingly large, although probably we'll get indications as to new projects coming into production, greenfield projects. I just wanted to come back, Keith, to that comment that you made about sort of Quebec. And one of the things that's always stood out for me about Q2 is its proximity to infrastructure. How much do you think infrastructure is going to limit the ability of new projects in Quebec to come into production?
Yeah, it's a good question. I think it's. I think it doesn't have to limit it, but I think what's going to happen is we had this conversation with our board at Q2 the other day. I think you think about all the projects in Quebec, and there's some interesting ones, bigger or smaller. But going back in time, Nemaska and Rose, Whabouchi and Rose will be the earliest, and Galaxy. And now you've got a series of, there's NAL, there's Moblin, there's PMET, there's the Adina lift thing, and there's Q2. And at some point, leaving NAL aside, nothing else is built, unless I'm missing something. And so you're going to get to a stage where people need to decide what they want to fund. My view on Q2 is, I hope, we don't have a resource yet, so we should in 4 or 5 or 6 weeks, but I'm confident it's going to be the biggest, highest grade resource in the province. It's in a far better location than some other projects. So if you're big capital, why would you not focus your capital on the best project? That's kind of my philosophy on that. And so I expect there will be projects in Quebec that have been solid projects that have been around for a while that just won't get built. And part of the reason will be because in hindsight, their ore body isn't big enough or good enough, and or their location is inferior, which is true for a number of the projects up there. So Cisco is a lot closer to Matagami, say, and Rail than most of the other projects in the James Bay region. That's a big advantage, I think. And we'll have a resource in March, April, hopefully late March. And then we'll have economics around the project in the form of a PEA, hopefully in the second half of the year. As you can imagine, that's a process that requires a lot of thought. It's a big ore body. and scaling production is an interesting exercise, and thinking that all through is an interesting exercise. So it'll take some time, but I think what the market will ultimately see is this is a really big ore body, really good grade in a good location with an infrastructure advantage. And I don't know if that transport cost advantage per ton is $50 a ton or 25 or 75. I haven't looked closely enough. Some others have, but it's meaningful. And when spodumene is $2,000 a ton or $8,000 a ton, like it briefly was, people don't think about transport costs a lot. I can tell you, having been in the trenches, people care a lot about transport costs when spodumene's $600 or $700 or $800 a ton, and you're selling 5.4% material or worse, and transport becomes a critical issue. And it's a big advantage for North American Lithium. That's the best located project in Quebec, I think. But I think arguably Cisco is the second best and has a big advantage over some of its kind of further north neighbors.
Mm-hmm. And I think, when you talk about infrastructure, obviously Brazil stands out as an area that is very advantaged. And that's an area, you talk about the development of spodumene in Brazil, and certainly the infrastructure and the mineralogy does support that area, does it not?
Yeah, listen, I don't disagree. I don't know as much about Brazil. I've kind of been around enough, and I think I agree with what you just said. I mean, good low power cost, low labor cost, good infrastructure, a lot of potential. I mean, I have a view that the lithium demand is going to continue to grow for decades. And there's going to be sources of supply from different regions. One of them, an important region, will be North America. An important question in North America, obviously, is how do the clays and DLE projects, how do they actually perform? Nobody knows. They're friends of mine. I'm optimistic and hopeful, but I don't know. But I think there will be a series of quality spodumene projects that become kind of anchor parts of the structure. Certainly Cisco will be one of those. At the same time, there'll be nice projects built in Brazil, and Australia will continue to be important, and Africa will continue to be important. So be interesting.
Okay. And obviously big news this week was Albemarle's decision to finally put the Kemerton plant out of its misery. West farmers, I noticed, are very happy with the development of their plant. Any views on that? I mean, a lot of people saying, well, lithium hydroxide production in Western Australia is not viable, but it seems to be viable for some people.
Well, in fairness, I missed the West Farmers news. I'll have to look at that. I know those guys a little bit. I think, it was disappointing to see from a spodumene producer's perspective, which is where I've always come at this from. The West desperately needs successful hydroxide conversion, carbonate conversion, spodumene conversion. I was, we'll talk later about Rio, but I was happy to see the Rio announcement yesterday or the day before. Just because, obviously, to the extent they can make Bécancour work, and Bécancour has the ability to double or quadruple in size, and there's a lot more places in Quebec you could convert. So it would be wonderful to see a major like a Rio Tinto crack that code and build a profitable business that's core for them and important for them. Hopefully they can do that. I think Tesla's doing well in Corpus Christi. I think I saw a tweet from Elon the other day encouraging others to do that again, although it's challenging. There haven't been a lot of success stories outside of China in converting spodumene concentrate. It's very capital intensive. Investors are skeptical about anyone's ability to succeed. The Albemarle announcement doesn't help that. If Albemarle can't do it, and I've always thought WA was an imperfect location. I mean, the best thing about WA is you have a lot of spodumene. And it's a great place to operate. It's not a great place to build a chemical plant. I mean, and if there were no spodumene in Western Australia, certainly nobody would dream up the idea of building a lithium conversion plant over there. Everything else over there is pretty high cost for good reason. But we'll see. It'll be interesting to see how that part of the business develops.
I want to interject on a couple of points here. In the PLS announcement, they announced a couple of weeks ago that they had $100 million prepay from Canmex, and that had a price floor of $1,000 in it. And that seemed to be very much a reason why they restarted the Nugaju plant. Haplo on Twitter, kind of commented, but price floors from Chinese are not always followed. And what was interesting was actually the Nugaju plant, when it was Altura, they had a price floor of, I think it was 550 or 500 from a high quality off-taker like Ganfeng. Ended up not adhering to Altura's price floors, and that actually helped put Altura into bankruptcy. So Pilbara is not going to be in, or PLS will not be in that position. They're super well capitalized right now. I saw there was an interview with Dale Henderson in the Wall Street Journal. He said, worst case scenario, we turn it on, we'll turn it back off again, right? But they're super well capitalized, so it won't have a bankruptcy effect. They were extremely measured, I thought, with their Brazilian acquisition of Latin Resources. I mean, pushing that out all the way until the end of next year, studying that. I think the P2000 is more likely, but they're also studying that until the end of this year. So I think there is latent supply. That has always been, the fear that all the bears in lithium were like, okay, things could be just turned, back on quickly. I really think this asset is faster than most, right? They maintained that it was already in operation, and this was, easy 4 months, they're saying, to kind of come back on. Although Daniel Jimenez was saying by the time that's converted to chemicals, it'll be sometime next year. So we'll see. The other comment, on
Howard,
Kemerton,
just to interject on that point, I think one thing the industry has seen a little bit of, and I think we'll see more of, is consolidation. And it's helpful to have a group like PLS kind of emerge as an industry leader. And, if you had, independent assets and independent hands, everyone's in a hurry to develop their own asset. And if you're Rio Tinto and you've got Wabuchi and Galaxy and you get to decide which of them you're going to develop, that may mean the other one never gets developed. Or if it gets developed, it'll be 5 or 10 or 15 years later. That's ultimately good for the industry. So, having kind of big companies with multiple projects have to prioritize. They're not going to build everything at once. Frankly, Elevra is a little bit like that. It's a smaller version, but they've got multiple development opportunities, and how they pace those will, they'll undoubtedly stage them. And that'll be, I think, good for how the industry evolves.
I very much want to talk about a lot of what you just said and link it to Albemarle's Kemerton decision. So I don't know if this is forever closed, or if this is, for a period of time, but this is now train one, right? They used to talk about having 4 trains, right? And now they're having nothing, and they're writing it down. But I think this has a lot to do with the dichotomy between margins at the spodumene level and the converter level. I think Albemarle basically said there's no margin in conversion, and they could sell their Greenbushes feed at a much higher margin into their own plants in China, or tolling in China, which they've done in the past. It just doesn't. So I think Albemarle views, even though they talk about, hey, we make chemicals, and you view it like across, an integrated supply chain, I think they are looking at the dichotomy between mining and converter margins and said, this just doesn't make sense. And that was a point I made in the strategic lithium reserve idea, was the incentive price needs to be across both conversion and mining.
I think the issue with the Albemarle plant is very specific insofar as people assume it's an integrated plant, whereas in fact it's a sort of semi-integrated plant. I mean, the difference with the covalent plant is that they 100% own the mine, and they 100% own the refinery. So they can supply, the spodumene to the refinery at cost price. Therefore, they're banking the whole of the margin. Whereas with Albemarle, I don't believe that they're able to source the spodumene at cost price. So they're effectively a merchant.
But Matt, that's a little bit false economics. I mean, if you're West Farmers or SQM and you're running and let's just say they produce spodumene at $500 a ton, and they could sell it for $2,000 a ton, and there's a $1,500 margin on the, it's just transfer pricing. I mean, transfer pricing at cost is one way to do it, but that doesn't necessarily reflect where the economics are. So we'll see. I mean, listen, I hope West Farmers and SQM are hugely successful at covalent, That's an ore body that could probably be over time expanded as well. And West Farmers is a very capable, as is SQM, capable chemical company. That's a technology they could export, or shift to other places as well where there are ore bodies they can be part of. So I'm cheering for them to be successful, and all these guys that are doing conversion.
Keith, I'm with you on the transfer pricing, idea. I'm not convinced that Covalent is rushing to produce hydroxide. I mean, if you look at their recent comments in SQM, they're selling spodumene, right? And they have optionality. They talked about optionality. So unless there's a chemical margin, they're not going to ramp up hydroxide, right? So as long as the margin continues to be on the spodumene side, I predict Covalent, both SQM and West Farmers are going to be happy to just sell spodumene into China, unless and until there's converter margin, they're going to slow play that, in my opinion.
We'll see.
Yeah, we'll see. And listen, at some point, I remember having this in conversation with a lot of investors. The conversion side's harder. Think about where we were at Piedmont. I mean, we had a perhaps naive, optimistic view 7-8 years ago that it was something that could be done. This is before anybody had proven how hard it was to do in the West to produce lithium hydroxide from spodumene. And we, and then as people got more and more skeptical about it, I kept saying to people, nobody's going to build this conversion capacity if there's no conversion margin, because the CapEx is higher, the execution risk is higher on the downstream side. So if you got to spend more money and take more risk, you got to get a return, else nobody's going to do it. So that's kind of where we are today. It's going to be interesting to see how that side of the business develops. And anyway, it'd be interesting. I mean, one of the solutions that was talked about before China became a dirtier word over here was just let the Chinese come in and do it in the U.S. with kind of their capital, their know-how, our people, and our materials to do that in the U.S. or Canada. That would be, in some respects, too easy. I don't think it's going to happen in this environment, but at some point there'll be conversion in the West. What's that?
Could happen in Canada.
It could happen.
It could definitely happen in Canada, given Carney's middle powers outreach. But I think it could happen here in the U.S. as well. At the Detroit Auto Club in January, Trump said again it might even be BYD or CATL. If they build factories here, they're okay. And I think there's little risk in the midstream. And I'm very hopeful and think we should have kind of a grand bargain. Xi and Trump are meeting in April and then a few other times later this year. I think this very much could be part of it. There's a huge recognition by the Trump administration that is processing, not that mining, just mining matters. And to see Albemarle, as a big American company, actually, it's a cognitive dissonance there. It's completely contrary to what we're trying to, all the discourse of getting ex-China processing. But yes, Tesla does seem to be successfully processing. And by the way, so the concept of mine mouth conversion is less important than, I think, being close to CAM and PCAM, and battery manufacturing. So to your point, Keith, it doesn't necessarily seem natural that Western Australian conversion is the answer. But you had, yes, it's good news. Rio did affirm that they are going through with Bécancour. That is their hydroxide conversion plant. They said, I think it was 60% complete. But they were also slow playing the timing of commissioning. Or they said commission, maybe next year, or make a decision on construction, but it's only going to be 2028, I think, before it is producing. And they are going to choose between Galaxy and Whabouchi. Galaxy is a much bigger mine, but they're going to make that decision, I think, in the first half of this year. So that will be an integrated into Canada. That's that on top of Tesla. And then also Lithium Americas just had a construction update. So that's an integrated mine to conversion. So, and Albemarle and Rio Tinto do convert, carbonate to hydroxide in North Carolina. So we do have some conversion. We have a basis here. What was interesting to me, Keith, was Alevra announcing this offtake with Mangrove a week or two ago. What do you know about that? And especially given, like, why wouldn't, if you had a plan to convert Carolina ore into Carolina hydroxide, why couldn't you convert North American lithium ore to Carolina hydroxide? Right. So did you have any insight into that? I know you're not part of the company anymore, but.
Yeah, I don't have any insight. I have a point of view, which is, I think increasingly, regardless of our own confidence about ability to build conversion capacity, it became clear the capital markets are more skeptical in that. So for a company like Piedmont or even Alevra to say we're going to go spend $1 billion or $2 billion to build a lithium conversion plant, every meeting is going to be, well, gee, why do you think you could do it if Albemarle apparently can't do it in Kemerton? That's the first question. It's a hard question. So I think my impression is the Alevra guys, and they were being quite public about this, I think, are very focused on the upstream. That makes sense for them. It's a mining company. They've got large scale mineral projects. They're the only producer of spodumene in concentrate in North America. It's a big advantage. So good for them. Having said that, one of their challenges is there's nowhere else to send that material other than, say, Tesla or, say, Bécancour eventually. But other than Asia, mostly China, that's a long way away. Transport's expensive. It's reasonably expensive to get it to the port. It's reasonably expensive to get it from the port to China. And it's a disadvantage relative to, say, the Australians, where the port's closer and China's closer for those folks. So I think to the extent there's anything they can do to encourage development of conversion capacity in Quebec or North America, that's a smart thing. I know the Mangrove guys a little bit. And I don't know much about their flow sheet and their plans and their capabilities or their funding, because they'll need a lot of funding. But I think what they're doing is important strategically for North America. I got to believe there are parts of different governments that might be encouraging them and be helpful to them. And it'd be wonderful if they can, have some success. And there are others out there as well with the same idea. Again, it takes a strong technical team, a lot of capital, and patience to make it happen. I think we talked about conversion margins. I'm very confident that anybody that cracks the code will, through the cycle, make exceptional margins. I don't think, to me, there's no question to me. Let me start with the fact that if you're Rio Tinto and you're going to have Bécancour, and let's just say they have an opportunity to grow Bécancour and use other feed, that other feed is going to save $50 to $75 a ton at least, having conversion in Bécancour rather than China. And it's going to be North American material, which customers are going to prefer. So there's a margin that Rio Tinto should be able to capture in part for that. They bring that to the table. We, the Quebec spodumene guy, brings the spodumene to the table for Rio to convert. But on the other hand, they bring the transport cost savings and the political, and the avoidance of any political issues. So there's an economic savings there. I think some of that can accrue to the converter, and including potentially a Mangrove. I think realistically, I don't know where Mangrove stands from a development perspective. I'm out of date. We're in February 2026. So if they're producing by 2030, that'd be probably a miracle, but I don't know. I'm out of date. So it's kind of a longer term game. But I think anything someone like Alevra can do, and for that matter, PMET or Lift/Winsome or Q2, anything we can do to encourage conversion capability to be built in North America, that's a good thing to do. I'd add the Frontier, work with Mitsubishi. I don't know where that stands. I'm out of date, but somebody's going to crack the code and I think do really well.
Keith, you say, I appreciate what you're saying, that the capital markets are fearful of a spodumene producer also doing conversion. But if you look at MP Materials, the government's backing them to build a magnet plant. They've never done that before. And they're backed Lithium Americas, which is a mine plus, conversion. So, and the capital markets were there to fund that if, government were backing it. And you were, back in the day, you could have had that support, as well. So I think theoretically.
Yeah, listen, Howard, I agree. I mean, those are different companies. Those are, better than anyone, LAC is a 20-plus-year-old project. These things have been around a while, and MP's a producer with, so I don't disagree. The government, there's never been a better time, particularly for something with an American slant, to have a critical minerals project that can help America with its critical minerals deficit. There's just never been a better time. And I think that could extend. It's apparently extending into Africa, so it certainly could extend into places like Quebec, and I hope it will over time.
And I want to talk about that because the big kahuna in spodumene land, the monster of Manono in the DRC. There's lots of talks there recently that cobalt, a Silicon Valley backed company. There's been some speculation. I don't know. I don't want to speculate about what that speculation is, but it has been publicly disclosed that the U.S. government is getting involved in the DRC and other places. Right, they're not just leaving it up to China's Belt and Road, and this is on their radar. And Robert Friedland is in the DRC, and he was in the Oval Office. So, and separately, there is Zijin is developing. I think the northern part of AVZ. So do you have any color or thoughts on, and Matt, someone asked on Twitter, is Manono in your supply models? Like, is there a risk here that there's a deal, with AVZ and Manono suddenly becomes a near term prospect?
Do you want to start off, Keith?
Yeah, listen, I'm out of date. I think Manono will Manono be a producer at some point in the next decade? I think yes. Can the market accommodate it? Absolutely. Will it be nearer term, like 2 to 4 years? I have no idea where they are from a development perspective, and they could probably move pretty quickly. We at Piedmont were looking at a project in the DRC. I'm not sure that ever made it into the public domain. It goes back 4 or 5 years, but it was during the Biden administration. Our team was over there, and the Biden administration was coincidentally over there, and they were very focused on, bringing an American, in our case, an American group to fund development of a mining opportunity, really high quality mining opportunity in the DRC to bring that material into the U.S. market. That was sort of a plan we had that we thought was pretty interesting because the ore body was so interesting. It turned out it was in a region of the DRC that was where neither the U.S. nor the DRC government could ensure anyone's safety. It was in a far worse region than the Manono. So quickly that went away. But yeah, I could see something like that, and I could see that sort of investment in other parts of the world where right now it might seem surprising, but where the U.S. might go in and fund development to bring material our way. So I don't know, but otherwise I'm out of date on Manono, Matt.
In answer to your question, yes, I do have Manono in my models from 2027 going up to maybe 1 million tons a year over the next sort of 2 or 3 years. So yes. But that's not to say it couldn't be much, much bigger than that. But I think the key issue with Manono is going to be the transportation because it is very seriously landlocked. And realistically, I think they're going to have to go for a lithium sulfate or an intermediate plant near to the mine to avoid, taking on the huge transportation costs, which, as Keith said, don't really matter when spodcon's about $5,000 a ton, but when it's sub $1,000 a ton, they're quite invasive.
And there's not any, and to the extent that the U.S. gets involved in that, meaning that material is not going to go to China, there aren't any kind of sulfate to carbonate or hydroxide conversion facilities that sulfate from the DRC, that theoretical sulfate from DRC could be processed to. So it'd have to be part of an integrated chain. And yeah, it'll be a long time before that influences supply. I just want to end here, Keith. You're both Canadian and American, and any comments on the politicking here? Because I used to think Canada, hard rock, and the U.S. would be natural integrated projects, and here we're talking about the U.S. maybe backing something in the DRC, but why wouldn't big U.S. dollars come into Canada? But Mark Carney is seemingly taking a big leadership point for all the non-U.S. kind of countries, vis-a-vis Trump's bullying. So what's your read on how that plays out? I think we're going to have some news, at PDAC with Canada in focus?
Yeah, I've obviously watched with interest. I grew up in Canada. I'm a dual citizen. I will be cheering for Canada for curling and hockey in the Olympics. I want to be clear about that. But otherwise, I've been in the U.S. a lot longer than Canada. I think it's inevitable. I think it's inevitable that we get past the sparring and that reality kind of sets in and people understand that we share a border. There's great resources in Canada that are really close to the U.S. and Manono's great, but there's if you add up what's in Quebec, there's more than Manono, and there's a couple projects in Quebec that are really competitive with Manono, frankly, especially when you think about transport costs. So I think it's easy for folks are scoring political points. I think that we'll get past that, and this opportunity to really think about critical minerals and national security from kind of a broader perspective will over time work to the favor of kind of Quebec spodumene folks. Where better other than the U.S. itself, where better for the U.S. to secure its lithium than from immediately north of its border in Quebec? There's really no better, friendlier nation over time. And we've had several months of sparring, which has been entertaining, but I think it won't probably amount to much at the end of the day, I hope. And I think, as I think about folks in Washington trying to secure lithium supply, and Howard, you and I've had this conversation ad nauseum. I'm hopeful and optimistic. At least I'm hopeful for all the non-conventional sources in the western part of the U.S. None of them are proven. Having spodumene to hydroxide or carbonate conversion, pretty proven. Just not economically by the West yet, but it should be doable. And there's a lot of spodumene in particular at a place like Cisco, the Q2 asset, and in the long run, that belongs in the U.S. market or North American market more than it does in the China market. So hopefully that'll all work out. And I hope there are some good announcements at PDAC next week.
To your point, Chris Wright, I tweeted, was quoted yesterday about Greenland and rare earths, because all of last year I was like, oh, we're going to Greenland because it has rare earths. But he basically said that, Greenland's a national security thing. Rare earths are not rare. He didn't say that exactly, but he did say that infrastructure matters and grade matters, right? So he recognizes that Greenland does not have high grade, nor do they have infrastructure. And I just put up a post because coincidentally, Brazil Rare Earths, had an updated note which talked about its high grade and its proximity to infrastructure. But all of the things that you just said, Keith, for lithium, apply as well, right? Infrastructure and high grade.
Yeah. And listen, I think all the talk about Greenland and all the talk about Ukraine a couple of years ago about mineral potential, it's interesting, but there's, I think, probably a lot more mineral potential in the U.S. and Canada than there is in those two countries. And it's demonstrated in Quebec for spodumene, and it's pretty straightforward and easy. And the infrastructure, while some projects are more challenged than others, generally the infrastructure is pretty darn good. And
that is true as well for Brazil, which leads us into our next interview with Lithium Ionic. So stay tuned. Thanks a lot, Keith.
Thanks, guys. Really appreciate it.
Cheers, Keith.
And now for our update with Lithium Ionic's Chief Operating Officer, Mike Westendorf, who we last interviewed a bit more than a year ago. Checking back to that interview, Mike, Lithium Ionic, which trades on the Toronto Venture Exchange, ticker symbol LTH, was 83 cents. It's now 96 cents, or about 166 million Canadian market cap. Lithium Ionic has spodumene development projects in Brazil, adjacent to Sigma Lithium's producing asset and the Latin Resources assets bought by PLS in late 2024. For disclosure purposes, RK Equity is an advisor to and holds equity interests in Lithium Ionic, but we are, of course, not financial advisors, and nothing you're about to hear should be considered investment advice. Please do your own research. Canaccord, BMO, Stifel, Cormark, Claris, and Desjardins provide research coverage on Lithium Ionic. If you'd like to receive any of these notes, please email us at rockstockchannel@rkequity.com. You can follow Lithium Ionic on X at Lithium Ionic and their website, lithiumionic.com. And with that intro, welcome back, Mike, Matt Fernley, my partner, is going to dig in with his questions.
Thanks, Howard. Thanks for having me.
Hi, Mike. Okay, so let's dig into the project in a little bit more detail on in this interview. I guess there's lots of things to talk about with regards to the Bandeira project, but I mean, I think the first thing that stands out for me is the location. Can you sort of talk a little bit about that?
Yeah, sure. The Bandeira project's really in a great location in a prolific mining district in Brazil. So it's located in the state of Minas Gerais. It's positioned in an area that's been termed Brazil's Lithium Valley. So there's quite a bit of activity that's happening there. Directly adjacent to the Bandeira project are two existing operations. So to the north, we have CBL, which is a family-owned operation that's been running since 1991. And to the northeast, we have Sigma, which began operations in late 2023 and has their claims that wrap around to the east of Bandeira and down to the south. So it's a pretty active area. Up north by our Salinas target, we also have the cleanup property that was acquired by PLS last year from Latin Resources. So again, tons of activity going on, lots of good exploration, lots of good deposits. And it's not a new region per se, because we have established operations that are demonstrating the viability of these deposits.
And just to confirm, the CBL project, that's an underground mine, yeah?
That's right. So CBL uses more or less the same approach that we have in our design. So they've been operating an underground deposit for the past, since 1991, as I said. We've been in close contact with the CBL team, and we've been watching how they mine that deposit, where their successes are, where their operational constraints are. And we've been bringing that into our design, and we plan to use the same approach for attacking the deposit. Sigma is open pit, but likewise, it's a somewhat of a different deposit in terms of structure. So we decided to keep with the CBL underground method, both from an operational perspective in terms of how the deposit is orientated, and from an ESG perspective in terms of total surface area disturbance and interaction with local communities and stakeholders.
Okay, that's great. And you recently published an updated feasibility study on the project. Can you just sort of give us the top level results, production, mine life, CapEx, OpEx, etc.?
Yeah, so we're quite excited with this new feasibility study update. We did publish a feasibility earlier in 2024. And then after engaging the Arctech team, which is a group of experienced mining professionals that have been working on similar hard rock spodumene deposits globally, we built up our owners team with some additional engineering horsepower, and we readdressed the feasibility study through 2025. One of the key focuses we had in 2025 was that it was a bit of a down market scenario during that year. So spodumene prices were quite a bit lower than we see today. And we want to make sure that the operation stayed robust and flexible and can handle any future downturns or any future volatility that may happen in the spodumene market, so that this operation is robust and it survives any cycles. The key highlights there are CapEx. So in our first feasibility study, we had about 270 million of CapEx. We reduced that down to 191. There's a few components that played into that. One obvious component is the Brazilian reais and US dollar exchange rate. So that did slip a bit in our favor, which provided some benefit there. The other benefits come from leaning out the surface facilities and working with Arctech's design in terms of what they've deployed at other properties. So we've gone with a simple modular plant approach. It's well demonstrated. It's currently operating at another operation in South Africa that Arctech supports. And it's based on iterating many of their experienced startups that they've done over the past decade. Likewise, on the underground mining approach, we had a look at how the deposit is mined, how much primary development is happening before production, and we resequenced the mine to make sure that we can pull up as much high-grade ore as possible during the construction period, to ensure that we have ore in the ground as fast as possible to support cash flow as early as possible in the commissioning period. So that shifts out our blend between initial project capital and ongoing sustaining capital, and smooths out the cash flow profile so that we can support ongoing operations through any pricing environment.
Excellent. And just remind me, what's the production target life of mine?
So our average life of mine is 177,000 tons per year of spodumene output. That's on a 5.2% basis. We did select 5.2, just watching what a lot of our peers are doing in terms of actual sales and maximizing recovery. That 5.2 is built into our proposed offtake agreements that we have on the table currently. It's fairly steady. As we do go deeper in the deposit, the grade does increase. So our production output does increase with the life of mine. And we're currently sitting at about 18 and a half years total life of mine in the reserve.
Okay. And can we drill a little bit more into the OPEX? Because obviously sub $400 a ton, quite sub $400 a ton, that makes it pretty close to the first quartile or within the first quartile of the cost curve. And obviously Brazil benefits from low-cost hydroelectric power when it's available. But also your ore body benefits from mineralogy as well, which is very positive. So can you talk a little bit about the drivers for that lower cost?
Yeah, that's a really good point. I mean, one of the key aspects of this project is that it is located in a region that benefits from a lower cost structure, both from the deposit and from local supply chains, labor pool, other major cost inputs that go into any operating mine. Starting with the deposit, it is very coarse mineralogy. One thing we always say, when you walk into our office, there's a spodumene crystal roughly the size of your leg. So it's nice and coarse and chunky, and it's easy to process, and it lends itself well to low cost processing formats like DMS. That allows us to be competitive on the global scale in terms of other major operations that need a flotation process to be competitive. We're able to trim that flotation process out, which helps us both from a cost benefit perspective and from an ESG perspective in terms of not needing a traditional wet slurry tailings impoundment. We're able to use a dry stack tailings impoundment because we are operating at a relatively coarse product size. In terms of other benefits, you've touched on one key aspect. There is local hydroelectric power available in the region, so it's low carbon power supplied to the site. And there's an existing substation roughly 3 kilometers from the property, which makes our power connection quite simple and straightforward. Likewise, because Minas Gerais is a very active mining state, all of the major suppliers are there. The key supply chain is well supported. The major equipment manufacturers have repair facilities, parts inventories. Everything's local within the state and easy to rely upon in terms of critical spares and other service aspects of running the operation. So where we lie right now is $378 per ton on an operational site cash basis. There are adders on top of that. So in terms of transportation, costs us roughly $132 per ton to get a ton of concentrate from the mine gate all the way into the port of Shanghai. So it is competitive globally in terms of first quartile and beyond in terms of global spodumene operations. We do also have the added benefit of being able to benchmark ourselves with our peers. So we see Sigma's reported costs coming out in their quarterly reports. That gives us a good data point in terms of what they're seeing in practice with running a similar scale operation right next door. And we also watch CBL closely and look at how their underground costs shape out and how that impacts the overall cost and cash curve.
Excellent. And do you have ore sorting in your circuit?
We do. So we address it based on the needs of the ore body. So we're cognizant of ore sorting has the added benefit of improving the grade delivered to the plant, which indirectly gives us an improved recovery and gives us a cleaner concentrate at the end of the process. But it also comes with the detractor of having a slightly lower recovery because you are trimming out and you have slight losses on the front end. So we have it built into our capital plan, and we have it specifically designed to attack portions of the ore body where we want to ensure that we have the right grade being delivered to the plant.
Excellent. Okay. And obviously Sigma's put a couple of releases out recently about selling the fines component of their tailings. Would you have the potential to sell that component as well with your processing approach?
Yeah, absolutely. And that's a really interesting opportunity. We don't currently have that built into our economics in our feasibility study, but it is an upside opportunity to bolster our cash flow. One of the key things that happens with dense media separation plants is that you do get a natural rejection of fines at the crushing circuit. Those fines are generally high grade, around 1%. With stronger lithium prices, groups such as off-takers based in China get very competitive over securing as much supply as they can. And they become open to taking low-grade material such as those fines, where it adds additional positive cash flow to the balance book despite shipping costs. So it's a great opportunity, and we'll certainly take advantage of that once we get in operation. But it remains as upside to our current numbers that we published.
Okay, and just to sort of confirm on this is really something that happens with the DMS only plant. This doesn't happen in the same way if you use flotation. Yeah?
That's right. Yeah. So in a traditional flotation process, those fines would get processed through and they'd be captured as additional recovery on the flotation side. Flotation is an upside opportunity for us. Again, from a capital and an ESG complexity perspective, we haven't included that in our initial plan. It does remain a further opportunity, and it is something that would add some significant positive increases to our cash flow over life of mine.
Okay, brilliant. Can I ask, where are you on permitting and what's the pathway to production from here?
Yeah, it's a good question. I guess permitting is obviously one of the most critical things before we get to FID. So Brazil, it typically has a very lean permitting process when you compare it with other tier 1 jurisdictions like Canada or Australia. On the grand scheme of things, it is relatively quick when you compare it with these processes that most groups are familiar with. So we are in an LAC process, which is an accelerated permitting process designed specifically for operations focused on critical minerals and at a low capacity, so below 1.5 million tons per year. So we are at the final stages of this permitting process. So we filed our application at the end of 2023. We've gone through all of the regulatory steps in terms of impact studies, project design, review with the state. And at the end of 2024, FAM, which is the state agency which is responsible for drafting a document that goes to the approval board, submitted an application on our behalf for positive support of the project and recommending it for approval. Unfortunately, when we did get to our approval process in March in the meeting, there was some issues with clarity between the federal and the state processes with regards to consultation. And we've been working with the state through 2025 as they understand how to navigate this scenario and understand it. This is an issue that affects all deposits within the Lithium Valley, not just Lithium Ionic. So it is a collaborative approach per se in terms of ensuring that we support the state and we support local communities and ensure that everybody's satisfied that all consultation processes and all documentation is correctly in place. There is a new federal law which came into effect on February 4th. So this law was voted through Congress, and its key intent was to clarify this exact scenario and set clear instruction in terms of when subsequent levels of consultation or additional study work or additional efforts are required for permits such as ours. So that law is now in effect. We are working with the state to understand what the next step is. But from our perspective, the next step is moving forward to back to the approval board and getting our positive approval on the project. At that point, we will receive the LI, which is essentially the environmental license, the LP, which is the environmental license, the LI, which is the installation license, or our right to construct, and the LO, which grants us approval for full operation. So once we have those three in hand, we're able to start mobilizing and move towards FID. And the work that we've done in the background while we've been navigating this process has really helped us with getting ahead on engineering, offtakes, debt. So we have used this time quite wisely in terms of making sure that we are prepared and that we have additional information and additional strategy in place to support an FID once we get to that point.
Excellent. And sort of downhill with the following wind, how long would it take you to get into production after FID?
Yeah, so within our project schedule, we have roughly 12 months to construct all surface facilities. The key driver for our project is development of the underground. So from mobilization of our primary underground mining contractor, it'd be roughly an 18-month development cycle to get the underground stopes to full production.
Okay. You talked briefly there about engaging with potential funders. Are you getting the phone ringing off the hook, or what's the status of those discussions?
Yeah, it's quite exciting. I guess over the holidays there was a pretty stark turnaround in terms of spodumene prices and the global market. We spent quite a bit of 2024 and 2025 engaging with different groups and sourcing out different sources of funding. A lot of those groups have been quite aggressive in reaching out to us, and they've been quite supportive. Now that they see that the actual market spot price is supporting the price forecast that we put in our model. In fact, it's beating it, which is great.
So quite a long way above.
yeah. So it's fantastic, right? And I guess today's price puts us in a really strong position in terms of what levels of debt we're able to service with operational cash flow. So we do have term sheets that are hitting our desk now in terms of providing full debt coverage for the project. And we're working through that with our key counterparties right now and finding the best path forward in terms of cost of capital and the structure that supports us the most.
Okay, great. And what would you say are the major catalysts then for the stock over the course of 2026?
Yeah, I guess first and foremost, as you touched on, is getting positive approval on the permit. Once that happens, there's a cascade of events that we have queued up in the background that are ready to go. So we have securing our debt facility, we have offtakes, and then we would move forward to FID. Once we have FID, we would mobilize our main contractors, start construction of our Piaui River Bridge, and get the site fully mobilized and get into the full construction timeline.
Okay, cool. And what's the cash position in the company just at the moment?
We're sitting quite comfortable. We're around 15 million. So that allows us to support all ongoing engineering activities, and it gives us the pad to support ongoing permitting activities while we progress into a fully detailed CapEx list that will in turn support our debt facility.
Okay, brilliant. Thank you very much. Howard?
Yeah, thanks, Mike. Look, we've always been attracted to what is a keep it simple, stupid, keep it spodumene stupid story. And in low-cost, permit-friendly Minas Gerais, Brazil, it's just a matter of knocking down the pins to, get financed, right? Get the engineering done, get permitted, get partners. And as long as lithium prices cooperate, right, and the market's there, you can get it done. And it looks like, we're in a market environment. If the restart of PLS's Nugaju plant announced yesterday, I think is a very strong signal that this highly disciplined actor in the market sees the rise in spodumene prices that we've experienced in the past 6 months as sustainable. And that operation should be about, or maybe even slightly higher cost than what you're talking about. So looks good, right? If they did say they're studying their Kalina, project, right, that they bought from Latin Resources. So they'll make a decision on that, I think, at the end of 2027. So they seem to be not aggressively bringing that one into production, but that's what happens when actually Keith said it earlier today, like when you have consolidation in the industry is good, because then not all projects kind of come on all at the same time, but you're a one project company, and I think there's a good window here. And the market will need all of this, spodumene. So good to hear the progress, and good to have you back on, Mike, in a better market environment than, I guess, the last time we spoke a little bit more than a year ago. And with that, look forward to seeing you, hopefully at the PDAC in about 2 weeks' time, and following progress throughout this year.
Thanks a lot, Howard. Appreciate the discussion. It was good. So we'll be at PDAC at the Brazilian Pavilion, and attending the Brazilian Canadian Chamber of Commerce events as well. So happy to meet up with anybody available.
Sounds good. And if any of our listeners are in PDAC in Toronto, please make sure you visit Lithium Ionic there.
Great. Thanks, guys.
All right. Thanks, Mike.